Good morning, good afternoon, good evening, everyone. A lot of things going on in Bitcoin land. We don't need to talk about the stock market today. It's having a nice pop reversal. We'll take a look at that later in the week to see if it's for real. But Bitcoin has, as you all know, started a decline, which everybody was predicting, and nobody agrees on exactly where it's going. So we're going to take a look from our perspective using our technicals. Sawcruhteez had some very interesting 4-hour charts yesterday, and they did what he was afraid they were going to do. So I'm going to be very interested to hear his explanation of that. What I will do right now is I will just go directly to screen share and pull up my strange chart of Bitcoin. Strange because many of the indicators on it are quite different than other people use. What you're looking at is the weekly chart. Number one, the weekly chart has broken the old phase 2 line, which is this very important trend line now after trying for 3 weeks to stay above it. Number two, we are on a 9 this week, and we are down at 75.93, and we have been lower. So the question is this the dip, and is the dip over or about to be over? And the way I'm going to answer that from my perspective is by, first of all, taking off the price of Bitcoin and looking at these 3 moving averages. Now, Sawcruhteez uses different moving averages, so does almost everybody in the world except me. Brief explanation, my short term is only 2 weeks long. My intermediate term is 7 weeks long, and my long term is 30 weeks long. And the reason I even use this 2 week is because I want to get out early if there's a possibility of a trend change. And the only method I know of doing that is using something that tracks the price very, very closely. And you can see that that line basically stays right in the middle of all of the candles. Candles go above it and below it constantly, but it tracks it very closely. Right now we're sitting in the middle of this week's 9, and if we continue lower, that will continue to drop. So that's what I call my canary in the coal mine. I want not only price to be going up or down, but I also want that short-term moving average to tell me to sit up and pay attention. There is no danger to the intermediate term, which is moving up very sharply, and the long term is only just started up. This configuration is a bull market. That's what I said at the time we bought back down here in the low 6s. This system I call Consensio had signaled much earlier that I should have been buying, but I didn't, and that's because I have another indicator called the Hyperwave, which is still in a phase 7, which means for me it is signaling that we can still go back down to 1,000. Now, the question in my mind is this got the possibility of dropping that low? And my answer is probably not now, but it does hold the probability, and I think the almost certainty, that it can and will sometime, not on this intermediate term move, or if this turns into an intermediate term move down and another intermediate term up and another intermediate term down, any of those could continue to go lower depending on what's going on with the fundamentals. But for now, the Consensio system is saying we need to be in this thing. And because of that, even though I believe that a short to intermediate term top was forming, I only sold half our position up at 8,800. I probably am not going to sell the other half, regardless of how low this goes, other than if it gets down below this line, this green line at 6,000, which I don't think this move is going to do. So my reading at this point, and I'm going to switch to the daily to make it a little clearer and then turn it over to Sawcruhteez. The daily, we've clearly got a 2 below a 1, and it's moving down sharply. It has taken out its longer term moving average, which is a 30-day moving average at this point, but we're still very early in the week. I believe what we're going to see is we're going to see this continuation down. There should be good support at the 7,500 area because of all of this activity. But this is building ahead of steam, and that could mean it's going to go down as low as my original buy targets in the 62 to 6,800 level. Depending on if that is true and how it gets there and what kind of a bounce we have before that takes place, I might change my mind and I might sell the 10% that we still have on a move back up to the underside of this trend line. If it continues down, the rapidity with which it does it, and the volume and other things and the length of time it takes to get there, I will reconsider and will very probably be buying heavily based on Consensio in the 62 to 6,800 level. But that's getting way in front of what is happening right now. What we know now is the top is in. It's an intermediate term top, and it could end at any time. It could end at 7,500. It could end at the lows down here at the 7,200 level, which were the highs of these candles, or something spectacular could happen to the upside or the downside. But for now, those are my thoughts. If this starts really accelerating down, we've got set up trend lines that are much lower, below the 6,000 level at 5,600. And then as almost everyone's talking about the possibility of returning to the 4,000 to 4,200 area, I would not discount any of that. But I would like to make one other point, just to be very clear about how I think through these things, which is that on the weekly basis, which is what I use to make all of my decisions, if we continue down to the 6,000 level, we could turn the intermediate term lower. The short could go below the intermediate term, and the price could be below both of those. And if that's the case, I won't be buying until I see if the price is going to be able to hold above the 6,000 level, because I would begin to doubt it if the short cuts through the intermediate and the intermediate has also turned down. That cannot happen quickly because we still have a very strong intermediate term trend, which is my 7-week. So with that, I am going to go off screen share and turn it over to my partner to go into his analysis of, is this time to buy the dip?
All right, I will go ahead and take over the screen share here. That was great analysis, and I can't add a whole lot on the higher time frames. I think you covered it well, but hopefully can provide a little input on the lower time frames. Let me get set up there. Okay, so starting with 4-hour chart, I've got some horizontal areas drawn out. We did break down the trend line that we had been keeping an eye on over the last couple weeks. That happened shortly after yesterday's vlog concluded. We were looking at the potential close above this 50 EMA, but failing to close above the 9 EMA, which had rolled over hard, which was the final kind of confirmation that I was looking for saying that this trend line did hold. Was also looking to break above, I believe, 86, where I saw some horizontals. That didn't happen. Instead, we ended up taking out these lows here, which to me, that was very important, because if you remember Tyler asking about this right here, which looked like a lower high, we bounced, we came and tested the trend line here, and then it looked like we formed a lower high here, which I was not necessarily interpreting like that. What was most important to me was seeing this as a higher low here. We had a few wicks come down below this trend line and close above, and then a good bounce here. So to me, it looked like we were forming a lower high, something kind of like we saw back in here. Test the trend line, bounce, looks like it creates a nasty lower high, but then it creates a higher low and pushes higher. Kind of similar here. Looks like a little bit of a lower high, but then makes a higher low, pushes higher. That's what I was really seeing here. This higher low was most intriguing to me, especially with the bounce back above the 50 EMA. So once we took out these lows here, that told me that we needed to respond very quickly and wick back above, or else if we closed below these wicks, then that would tell me that higher low is very much in danger of not being able to find support above this area. So ended up closing way down here at 81 or so, and that clearly broke down this trend line, created what was the lowest close from here, not necessarily a lower low based on this wick, but definitely a lower close than we had. And then we got that bearish crossover with the 9 and the 50 EMA. So if you remember from yesterday's video, I said if that does happen, then I am going to be watching for a return to the 200 EMA on the 4-hour chart. Once the 50 breaks down and it gets a bearish cross with the 9, then my next area of support is that 200 EMA. So it does look like we are trying to find support from that area. Just so happens that it is also in line with an area of horizontal support that can be drawn in here, kind of using these highs and these wicks, these highs here. Do see some horizontal support that was right in line with this 200 EMA. So for me, that is very important, and indicates a potentially good opportunity to buy into the dip. Anybody that follows me on TradingView has probably seen my full process for buying the dip. I made a post that shares my entire process for how I buy the dip, and it also shares multiple other strategies that I think are valid options for buying the dip. And within my strategy, I cover how I like to scale in on the 50 EMA on the 4-hour chart, about 10 to 15%, and then more on the 200 EMA on the 4-hour chart, something like 20 to 30%. And a little bit more on the 50 EMA on the daily, and then my final entry is at the 200 EMA on the daily. And that's generally only if it is confirmed with other areas of support. I want to see either a trend line or a horizontal area of established support to confirm that entry. So based on my strategy for buying the dip, I did go ahead and buy right in here, because this 200 EMA is still bullish. As long as this is trending up, then I want to be buying it. if it is in confluence with another area of horizontal support. So that's exactly what happened here. And I decided to go ahead and scale in. I saved a very significant percentage. I had been buying off of this 50, a very small amount. And now I have added on this 200 EMA a relatively small amount, still saving the large majority for the pullback to the daily EMAs. So go ahead and zoom out there. And we notice that this 50 EMA is weighting down around the $7,000 area. That is the next spot that I would be looking to add to my position. And then the final spot that I would be looking to add is on this 200 EMA, which has started to trend up nicely and is currently sitting at about 5,500. So my strategy has me buying all the way down to here and not exiting unless we get a death cross with these EMAs here. So I am buying the dip right now. However, I don't necessarily think that this was the low of the move. It looks like it's responding from this 200 EMA on the 4-hour. But I'm not very convinced that that's going to actually hold and be the actual swing low. What I am looking at is a potential new bear channel developing that could provide the sort of runway for the correction that we are looking at down to the below $7,000 area. So if we connect the top of this wick with these candles in here, and then connect these candles in here, we get what's starting to look like a parallel channel. And as I mentioned yesterday, after breaking down the 50, I expect a pullback to the 200 EMA and then a retest of the 50. So that is what I would be expecting here, is to bounce from this 200 EMA at 75.40 up to retest the 50, which it depends how long that takes. It's moving down quickly. It looks to me like it should be in about the 8,000 to 8,200 area, depending how long it takes and how much it gets a chance to roll all the way over. So that is what I'm expecting from here, is a retest of the 50 EMA. Since there is a bearish crossover with the 9 and this EMA has started to roll over and is now trending down, I am expecting that to act as resistance. So I would expect to see a continuation of this channel. And the ideal situation for me would be to see a bounce right up into here at the 8,200 area, and then resistance take us down to the bottom of this channel, which would be at about 7,000, which would be right in line with this horizontal, and would also be very near the the 50 EMA on the daily. So that would be the area of support that I would be looking to buy next. And I'm not getting too excited just yet seeing this action coming off of the 200 EMA on the 4-hour. I still am, what to me is most important is lower high right here, lower low right here. Looking from here, we come down to here, create a lower high, and then create a lower low. That is bearish and tells me that this shouldn't necessarily be the bottom of this pullback. Even though that is the case, I still did go ahead and buy a little bit here because that is what my strategy demands, and I do not let my personal sort of inclination or my personal bias get in the way of what looks like a good buying opportunity based on my strategy. So that's what I have there. Anything to add, Tyler?
No, that's a great analysis. Do you want to just throw some stop and reverses on the daily and the weekly for a second? I failed to do that earlier today.
Yep, absolutely. Let me get the rest of that out of here. Taking a look at the SARs. So just took out the daily on today's candle. So that is very interesting. Putting the new SAR back up at 91.12. So the daily SAR is bearish as of today. And let's take
that's very interesting. And those that have started working with the stop and reverse, you know, it's a parabolic algorithm that accelerates as you go down or accelerates as you go up. It's not like a trend line, or for those of you that learn this, the Selgin system, which is basically a trend line in terms of stops. The parabolic SAR is designed in an up move to force you out, and in a down move to force you out. And I like that because it curves up into the price action or down into the price action. So the fact that we, how long did that SAR climb on the daily? I can't remember. It's been a while though.
Started at 63, went up to 76.
From 63 and up to 76. Okay, good. And if you could just pull up the weekly, I doubt if this is enough of a pullback to have caused any problems, but I'd like to just
before I do that, I'm actually finding the 3-day very interesting. So this started all the way back at 3,300. Basically right at the bottom was when this 3-day run started.
Wow.
And just broke down here, and some action right here that I just find fascinating that we'll see. It is not very uncommon to see something like this, but it is mind-blowing almost every time I do. Take a look at these 3 SARs here. Look at how much it accelerated from here to here. In one candle, it went from 57.89 up to 63.09. And then the very next candle, it went from 63.09 to 63.69. It almost started going sideways. And so it went from a huge progression to now it doesn't progress, and it picks the exact spot where this wick comes down to. You don't need to close below a SAR to break it. You only need that wick to come down and briefly break it for a second. It was unable to do it, and it just blows my mind how the parabolic SAR was able to quit progressing right when that correction happened and then catch that exact bottom, like basically down to the tick. You'll see this fairly regularly where it happens in real time. This SAR didn't print after this candle closed. This SAR printed after this candle closed. So it would have been there why this was happening. And to make that adjustment in real time and just to be so precise is absolutely mind-boggling to me. And then just seeing this long run, the longer a SAR stays in one direction, the more significant the following correction should be. So seeing that the SARs have been bullish on the 3-day since February, what do we got? February, March, April, May, almost 5 months of bullish SARs on the 3-day, and now it's finally broken. To me, that's very significant. The longer...
I agree with you, and I have not been watching the 3-day. That's remarkable, very important. That will help me to try to navigate this next 1, 2, 3 weeks according to the sequential in terms of a pullback off the 9 that we had. So great observation. I'm glad I asked, and I'm glad you pulled up that 3-day.
All right, now this weekly is definitely starting to progress. That arrow that I drew right down to the bottom of the channel just so happens to be exactly in line with the weekly SAR, which is right there at 70.23. So I definitely find that very interesting. An additional confluence of support will be there at 7,000.
Very good. Excellent. Well, thank you very much. Unless you've got something else, that's all I've got. That's a lot to think about. And I think it's important to understand the difference between the short term, which is ultimately the most important for the immediate coming action, with the intermediate term, which is what I still believe is the only thing we've seen on this run. It's a huge percentage from 3,100 up to 9,000, but it occurred in what I call an intermediate time frame. And the fact that we had so many overhead resistance areas between that 8,500 and 10,000 led me to start considering the possibility of taking some profit on what we had bought back in the low to mid sixes. And so we did take half of it off, but that was premature. We did that into strength, not into weakness. Now we've started a period of weakness that may or may not be signaling the end of an intermediate term move. The fact, though, that we saw the sequential give us a 9, and at the same time, the following action began breaking not only short-term support that Sawcruhteez was watching, but is even beginning to give some intermediate term signals. Now remember, those terms, short, intermediate, and long, are anyone's opinion. I keep telling people that I define short as days and weeks of a trend, and intermediate as weeks and months. Well, we've got a intermediate term move going to the upside against a long term, which is my definition of that is months and years. We've got a 2-year period of time, and we've gone 18 months into it, in which we are in a bear market. And until I have evidence that that bear market has ended, everything else falls into the intermediate category. And the only thing that my hyperwave measures is very, very long-term moves. And it has not given a signal that it's all clear, which only occurs with two things. Either we hit 1,000 or we go back up through 20,000. Now, I'm not going to wait for 3,000 all the way to 20,000 to begin positioning with the possibility that this intermediate term up move develops into something bigger. Right now, that assumption is being questioned by just the recent several days at the beginning of a 1 to 4 week pullback according to sequential, and already we're doing some destructive things to the short and even to some of the intermediate term indicators. So with all of that, that's all I've got for today. And Sawcruhteez?
Yeah, pretty much. I did want to try to take one question from yesterday that we were trying to get to but didn't have the chance.
Great.
Would you mind if I threw that real quick?
Not at all.
So had somebody ask if we are seeing broadening tops on altcoins lately. So that was a question that I thought was interesting, and one that we touched on a little bit in the webinar, that I thought we could pull up a chart here really quickly and show that there may actually be a broadening bottom on the Ethereum Bitcoin chart. So just one for anybody that knows or is starting to learn Selgin, we always count backwards, taking this point right here as our 5, coming back here and finding a 4 with this middle candle here that is higher than the 2 candles besides it. So then we would look for a 3 right here with the low that is lower than the 2 candles beside it. And it is awful close to being a bit of a double bottom there. So we need to check. The low on this candle is 0.02458. Low on this candle is 0.02453. So this one is lower by 0.00003. And that is enough to qualify, about 3 pips lower. So that gives us the number 3. And now we go ahead and look for a 2, and that jumps out at us pretty quickly. See that right there. And then the 1 is also fairly evident as well right here. So we do see right here a qualified Selgin broadening bottom. Potentially a buy setup would have been triggered on this close right here on the, well, that is what confirmed the 5. So here we actually are seeing a broadening bottom opposed to a broadening top, and Ethereum is a bit of a market leading coin, so it would be very interesting to see if there are any others that are currently experiencing the similar pattern. Something else to notice is how this is coming off of a major area of horizontal support. So seeing a broadening bottom at horizontal support is more important to me than just seeing it kind of in the middle of nowhere. So that will answer a question from last week. Again, we will do our best to keep these as short and succinct as possible while also fielding some questions from the audience. So if you did ask some questions today and we weren't able to get to it, we will do our best to jot those down and get to it in future episodes. So that's all I have, and I will.
That's great. Let me just point out one thing that interests me on that chart. I hadn't been looking at that, but on that of Ethereum, what's interesting, the way the stops work is when you get a Selgin buy signal, which we've just gotten on Ethereum, you basically place the stop at a point below the low point. And I just noticed that the point below that low point where you would put the stop is below your blue support line. So what would happen is if price goes back to that blue support line, not only will that break, but it will also stop the long trade. So the blue support line is critically important for Ethereum, in my opinion.
I couldn't agree more, and that's where a number of alts are testing very crucial areas of support, where if these break down, I mean, if this blue line breaks down, my next target, no doubt about it, would be down here at 0.008, and XRP, a number of others are at these very crucial areas where you would really expect accumulation to occur and a huge bounce to follow. However, if this is coming off of a bear market where Bitcoin is just trying to establish its first sort of leg of its bull run. So if these are unable to hold this, then that is going to be very, very important, not only for the altcoins, but also the Bitcoin market cap dominance in how far it may be able to go on its next run. So I couldn't agree more. This is very, very important time to be paying attention to altcoins. And for the most part, all you need is one horizontal line. And then maybe also look for some of these broadening patterns, which can provide very, very reliable stops. And when it's below, like you said, below this major area of support, that provides a very confident area to kind of enter a trade and know that if that stop does get triggered, you should be highly confident the price continues downward.
Terrific. Great. Well, thank you very much, Sawcruhteez. Thank you, everybody. And we will be watching this closely and talking with you as often as we can.
All right. Thank you. It was a pleasure, and I'll plan on talking to you soon.
Great. Bye-bye.